Hello and welcome back. Hope you are good, doing well. So if you see my screen, then just type yes and sound is all right on your end. All right, so thank you. So let's move on. Let's look at the setups for this week. So if anyone wants to join us looking for training, just simply go ahead for wave-trader.com and you can join. And if you're looking for further information, just simply fill that and send that to me for further information. Okay, so let's move on. So we are having a yield curve chart. So we're going to look at that chart first, and then we're going to talk about on the setups. Okay, so if we're going to look at this 5 and 10 over 5, so we can see that this is inverted. Okay, not deeply inverted, but it's inverted. All right, so 10-year yield is just running below than the 5-year yield. All right, so this is a signal that something is going to happen in coming weeks to months. All right, so we are going to see a shock, or we are going to see a recession. So that's Fed is actually trying to do right now. They are trying to slow down the demand. All right, so we are having a strong demand right now. That's causing everything is to just keep pushing more higher. Commodities are pushing higher because of the war and other reasons, and oil is also pushing higher. All right, so stock is slightly under pressure. So bond yields are inverting. All right, so they are sending a signal that the market is not going to do well in coming weeks to months. All right, so 5, 10 and 5 inverted, and the most important yield curve is the 10 and 2. All right, so 10 and 2 is also about to hit the zero floor. Okay, so it is just 16 basis. Right now it's 20 basis point away from the floor. Okay, and formed its low over there at 16. So that chart is very, very important. Okay, so because this is telling us that what Fed is trying to do right now, they are trying to slow down the demand by raising the interest rate and tightening the monetary policy. All right, and that's causing the growth to slow down, demand to slow down. All right, so that means the assets which are rising very, very aggressively these days, or we are having strong commodities demand, or commodities are just rising very, very aggressively, sharply. Okay, they are about to find their top. Okay, and we may see top on inflation in coming months. All right, so inflation may top out. Right now inflation is running around almost 8%. All right, so the oil shock still to come, that still to come, maybe next month or after that. So we're gonna see oil shock as well in the inflation. So inflation may top out at 10%. All right, and Fed has also raised the interest rate last week. All right, so the most important thing which you should watch is the Fed balance sheet. All right, so right now Fed did not talk about the balance sheet. All right, so they said that they're gonna finalize that in the next meeting. All right, so what they were doing when we were having a quantitative easing, all right, so they were buying 120, almost 120 or 30, yeah, I'm not sure about the figures. All right, so 130 or 20 billion per month they were buying bonds, weekly, monthly, which was causing that balance sheet to continue to keep pushing more higher. All right, and this was the last time when they were went for the QT, quantitative tightening. All right, and they were reducing their balance sheet and stopped reinvesting the proceeds which they were getting from the bonds. All right, and were reducing their balance sheet, okay, which caused the crash March 2020. All right, so the figures were somewhere close to 4 billion and 6 billion. All right, so almost 10 billion per month at that time. All right, and they were saying that at that time that they're gonna raise to 20 billion per month. Okay, so this time the quantitative easing was there with a huge numbers. All right, so 120 to 30 billion per month. So they said that this is good. This time the reduction in the balance sheet gonna be quicker. Quicker means if they are going somewhere close to 120 or 30 billion, with the similar pace, the pace they were, were buying the bond, that's going to be a really, aggressive reduction in the balance sheet if they are going with with similar kind of pace. So we don't know yet. Okay, they said that they're going to finalize that structure next month in May. All right. And we may get some, information about that when we're going to have, Fed meeting minutes within next 3 weeks. All right. So what kind of that structure going to look like? So that going to, have a huge impact on the assets. All right. So the structure of the reduction of this balance sheet, okay, which they're going to announce in May, that's going to be very, very important, and that's going to set the tone of the market for next couple of years. All right, 2 to 3 years. That's going to decide where the market going to go. So we have seen strength on the risk on assets last week after the Fed rate decision. The reason was very, very much simple, that the way Fed should should be hawkish. They were not the hawkish. They just raised the interest rate. And as I said a couple of times ago, that raising interest rate is not going to be not going to put a lot of impact on the market. If they're going to keep raising the interest rate, that's not going to damage the market. All right. So the important thing is the balance sheet. Once they're going to start reducing the balance sheet, that may damage the market. All right. Okay, so balance sheet is more important. So that's the reason they did not talk about that in March. All right, they are trying to delay that. They know the risk. All right, the risk is very much high for reducing the balance sheet very, very aggressively to the downside. So once they're gonna start reducing the balance sheet, inflation automatically gonna come down. All right, so balance sheet reduction is more important than raising the interest rates. If they're gonna keep raising the interest rate, we're gonna have a lot of impact on the inflation. Okay, but once they're gonna start cutting the balance sheet, we're going to see, quick fall in the inflation, or the assets which are rising right now and causing the inflation to go more higher. Okay, they're going to crash. Hope that makes sense. You got the concept, what's happening right now. All right. So they said that, Paul said that in the meeting, that this time the reduction in the balance sheet going to be really quick. Reason, because inflation is close to 10% right now, or 8% right now, which is going to top at 10%. All right, so last time they took almost 700 days, we can say that. All right, and the target was the 2.5 trillion. All right, so their target was to bring down that. Let's just pull out at the area. Okay, so their target to bring down that balance sheet to 2.5. All right, so 2.5 trillion. Okay, but they never met that target. Okay, and we had that COVID shock. All right, their target was this. The target to bring down the balance sheet was there at 2.5 trillion. All right, but they reversed that. They went for the QE again at at 3.7 trillion, and they started to buy a bond again. Okay, so they are saying right now that they're gonna do quicker. Okay, this was this, slower reduction in 2017 and 2018, and they are saying that they're going to be quicker this time. Okay, they're going to be quick this time and gonna bring down the balance sheet really quickly to the downside. Okay, so last time they were slower, all right, and took almost 700 days or almost 2 years to bring down that balance sheet, which caused the historical shock on the stock market, all right, and they reverse that. So what's going to happen? What bond market is telling us right now? Okay, bond market is telling us right now, again, they're not going to meet that target, the target they set previously in 2017 up to 2 trillion. So we don't know what's going to be the target, all right, yet, because they haven't finalized the structure, all right. But whatever the structure going to be, whatever the target going to be for reduction of their balance sheet, okay, they're not going to meet that. That's the bond market is telling us. Bond market is telling us that the yield curve, okay, the yield curve which we have just seen over there earlier, the yield curve is telling us that they are not going to meet that target, whatever the target they're gonna set. Okay, so 5 and 10 already inverted. They have just increased interest rate with 25 basis point. Why is that? Why yield curve is inverting? Because there is a lot of leverage in the system right now. Okay, a lot of leverage in the system, and the economy is not handling that even 25 basis point of interest rate hike. So right now they are saying that they're gonna go up to 2.8% within this hiking cycle. Okay, I don't think so that they're gonna be able to raise to that much far away interest rate this time, right? And highly likely they're gonna start rolling back their hiking cycle this time. All right, so what's happening right now? So two-year yield is just struggling to break about 2% right now. All right, 2-year yield is just trying to break about 2%, and 10 is also struggling, holding that 2.20, 2.24, the max top which we have seen at 2.24. Okay, so what I see that yields are topping out over there. All right, so the longer term 10-year yield is trying to top out over there. So I don't think so that we're gonna see 10-year yield gonna go much higher than current prices. Okay, that's the signal which we are having right now from the bond market yield curve inversion. All right, so let's say if the 10-year yield push for another 100%, 100 basis point, for another 100 basis point, and go up to 3%, all right, or 310. Okay, then the yield curve gonna be then the 2 years gonna be quicker than the 10-year. All right, 10-year 2 years gonna be quicker than the 10-year, and the inversion gonna be deeper than. All right, the inversion gonna be somewhere close to negative 50 basis point. So that's a very less likely scenario. So we're not gonna have that. We're not gonna have deep inversion. Okay, so why I'm talking about that? So lastly, if I'm gonna look at the Fred chart. Okay, so if I'm gonna look at the backdated, all right, so if we're gonna talk about that, so we're gonna talk about the setups, guys. So let's just understand that what's happening in the market. All right, so if I'm gonna look at the 10-year yield, and I'm gonna go back to the historical. Okay, so this is where we have seen the historical interest rates in the US. All right, so the topped out somewhere close to above 15%. All right, and at that time inflation was extremely high at that time in the US. All right, that was the extreme scenario which we have seen in the US. So at that time the inversion was extreme on yield curve. On yield curve, inversion was extreme. So right now where we are at 1967. Okay, Fed is behind the curve. All right, interest rate, 2-year yield is running around 1.90, all right, or 2%, and Fed is holding interest rates close to 0.50 basis. All right, so they are very well behind the curve. So at that time in 1967, they were also very well behind the curve. And what they did, they raised the interest rate very, very quickly and went above the curve and caused the recession in 1970. All right, and everything just went down. So that's what they're gonna do. So they're gonna repeat something like that in 1967 kind of scenario. So once yield, once Fed, let's just pull some chart. Okay, so let's just pull some chart on it. So if I'm gonna look at the 10-year yield, and if I'm gonna pull out Fed funds rate, so if I'm gonna pull out that's 2-year, okay, and then gonna pull out Fed funds, so it's showing some error, I think. So the data is not updating. So Fed fund is close to 50 basis point. Okay, so we know that they just raised the there you got. Okay, we already got that. So we got that data. So the Fed fund rate is there at 50 basis point right now. Okay, they raised the interest rate. So they are having 50 basis point Fed fund rates. Okay, so first hike last week we got there. So they are very well behind the curve. Okay, so this rate, the real rate, should be somewhere close to 2%. They should be ahead of the curve to bring the inflation down. Okay, so that has happened in 1967. They were behind the curve. Okay, and what they did, they aggressively raised the interest rate. They went ahead of the curve. They brought the inflation down and caused the other assets to crash, the risk on assets to crash. Okay, that's what they're gonna do. They are trying to overcome on the demand. They are trying to curb the demand, all right, so that they can control the inflation. Okay, so yield curve is already inverted. Okay, so the 10 and 5 and 10 and 3. So the 2 is next, right? So 10-2 is the next. So what's going to happen? They're quickly going to raise the interest rate. Yield curve is already inverted. It's telling us that we are going to see shock or recession in coming months. All right. And again, they're going to roll back their policy. They're going to cut the interest rates. They're going to get out from this inversion. Okay, once they're going to get out from the inversion, we're going to have, lower inflation. And if inflation still not going to be in their target, they're again going to start to raise the interest rate. Okay, hope that makes sense. So what's going to happen with the assets? Okay, now let's talk about that. What kind of setups we're going to have after, Fed, for short term to medium term and longer term, because of this Fed action. Okay, now let's talk about that. So if I'm gonna look at the dollar, so dollar is almost reached to its target. Okay, so dollar index almost about to finish its move. All right, so this wave, the weekly wave which we are having over there. All right, so this is about to finish. Okay, so it still can climb slowly for more upside. Okay, but the longer term trend, okay, the yield curves which I have just shown you, or the 10-year and the 2-year which I have just shown you, we have already priced in for that. Dollar is extremely priced in for that. Okay, and the longer term inversion is telling us that we're gonna have shock again. Fed gonna reverse their policy, maybe after 9 to 12 months, okay, and then again dollar gonna start falling to the downside. That's a longer term picture. Okay, so we may have small more push up, and then again we may see another leg lower like that, like these two moves. Okay, so we may not see more upside above this top. Okay, I don't think so we're gonna have that leg. All right, so this leg only gonna happen, the next leg, the next leg on the dollar index only gonna happen then if Fed is going to go deep into the inversion. Okay, let's say 1% inversion. If you're gonna have let's say 1% inversion. So if I'm gonna look at the 10-year, so I don't have enough data on this. All right, so this is not showing there. Okay, so there we can see. So let's just try to pull out the 2-year on it. Okay, so this is not showing the the moves which we have seen here. So there we have seen deep inversion. So yield curve inverted deeply when rate market was very volatile in 1980 when Paul Volcker was Fed chair. He was raising interest rate very aggressively. His goal was just to bring inflation down. Okay, and he was not caring about the rest of the assets, and everything was just crashing. All right, so we were having a oil embargo at that time, and recession as well. So hope that makes sense. So dollar, yeah, so if that kind of scenario is going to come, Fed is just going after the inflation and going deep in the inversion, yield curve inversion, and just keep raising the interest rate, going even beyond 2%, okay, then we may see more strength on the dollar. Okay, then dollar index can go for another leg higher and can break the previous top. Okay, let's go back to the dollar index chart now. Okay, then we may see another leg higher. Okay, if Fed is going deep into the inversion, yield curve inversion, okay, then we may see, okay, then their goal gonna be just to bring inflation down. Okay, so there is the Paul Volcker era. Okay, so when Paul Volcker said that they only gonna, their goal is the bring to inflation down. Okay, they're not gonna compromise on that. And at that time, dollar was just keep climbing. All right, and then once they said that it's enough, inflation is going down, they started cut the interest rate and the dollar index went lower. All right, so that was the last time. So I don't think so they gonna do something like that kind of this time. Okay, they're not gonna raise interest rate so aggressively and gonna bring in rate close to 3% or even 4%, because this economy cannot handle that. Okay, and let's say if they are going to do something like that kind of things, then we may see another leg higher. Okay, on the dollar index can rise very well above up to 20 then. Okay, I don't see that picture is going to happen right now anytime soon. Okay, then what yield curve is telling us? The yield curve is telling us that they're gonna roll their policy very soon, maybe in after 6 to 9 months or max in 12 months. Hope that makes sense. Okay, so how are you gonna trade? Okay, these are the fundamentals which are just developing over there. How are you gonna trade? So you are still short-term bullish on the dollar index, all right, but and looking it to pull back, all right, so fall back within these areas over time. Okay, fall back. All right, so right now, as said, they haven't talked about the QT. They haven't talked about the balance sheet reduction. We don't know what structure that's going to be. All right, so once that structure going to be over there, we're going to have some, understanding what they're going to do, how aggressive pace going to be. All right, if that pace is going to be very aggressive, then we may see some, strength on the dollar. Okay, which can push the dollar index back to that previous top. All right, so still gonna be a one more up leg. Okay, so we almost reached to that target, the target which I was talking about on the DXY. Okay, so hope that makes sense. This is a longer term picture. So what to do on lower time frame? So lower time frame still bullish. You are looking this to break out. All right, so during the week, this week, and continue its short term bullish trend. Okay, this one more up leg. And remember that you are buying only for short term. The bigger move, the bigger picture, bigger weekly wave is about to end over there on the dollar index. Okay, this is what you are looking. So it to just stay short term bullish. Okay, and once price, tests the previous top, you're looking to counter it, get back within the weekly structure. All right, so then get back within these weekly structure. Right, so once you see that it's pushing up, struggling at the previous top, fall back, a deeper pullback, daily correction. All right, so if I'm gonna pull out my moving averages, okay, so price is right now trying to hold those moving averages. Okay, so in the last weekly market outlook, we were expecting this pattern formation, if you remember. So we are having that right now. So price to just hold that previous floor and continue to keep pushing more higher. Okay, one more up leg up to this area, up to this previous top. All right, so we don't have a bigger drop yet on the dollar index. So dollar is not ready to drop for a bigger picture. All right, so as we know that Fed is still behind the curve. Okay, they still can raise the interest rate. All right, and can go ahead the curve. All right, and dollar can stay strong till then. All right, dollar can stay strong till then, until they reverse their policy. Okay, or go into deep inversion, and that inversion force them to or significant slowdown in growth. Okay, so if I'm gonna look at the euro is just to the opposite. All right, so euro is struggling. Last week we were expecting it to correct. So I don't think so I need to talk about that a lot, because this is just the opposite chart to the dollar index. All right, so we can still see these prices on the dollar index, on the euro dollar. Okay, first of all, this 106. Okay, and in worst case scenario, as said, if Fed going after the inflation, then it can go even below that 106. All right, so yield inversion gonna force them to roll back their policy. Okay, so if I'm gonna pull out moving averages, so we are having that pattern which we were talking about in the previous weekly market outlook. Price is struggling. Okay, so you looking it to break down. All right, this it is not at a best spot where you can jump into the trade. All right, so if breakout is going to happen, then continue to keep dragging more lower. Otherwise, where you see my red box, okay, then you are paying attention price to hold these areas and short-term continuation to the downside. Okay, or breakdown, test this previous low, breakdown, okay, test this previous low, go back up for another leg, and then breakdown. All right, so price is struggling to go above the moving averages. So you're looking that to hold. So we may see, for a while within that daily correction. Okay, we are having almost a month, right? We are having almost a month in the Fed meeting today. Paul gonna talk about that. He may talk about he may be hawkish. All right, as that market did not buy what Fed Paul was saying in the last week. So we haven't seen a strong risk off wave the way it should be over there after the Fed meeting, as Fed was dovish. All right, but the longer they're gonna be dovish, okay, the higher the inflation gonna be. All right, and things gonna get more worse for them. So they are just trying to box themselves, rather by being slow. So they have to be quick to bring the inflation down. All right, so dollar is not a sell story at the moment till fundamentals are supporting to the dollar. Okay, so short-term trade's gonna be over there with the trend for buying the dollar. All right, but longer-term trade gonna be reversal. All right, longer-term trade gonna be reversal once you see that the bottom is going to form. So bottom is not formed yet. All right, so if I'm gonna look at the Australian dollar and New Zealand dollar, all right, so you're looking these two to continue to keep dragging more lower. Okay, so analysis is very much similar like last week. Okay, so we are expecting the Australian dollar and New Zealand dollar both to visit these lows. Okay, so visit this 67 and give us that one more bearish daily leg. All right, so if I'm gonna look at the lower time frame, price is just trying to break out, and you are looking this to be sharp. Okay, so be sharp to the downside. So sharp, okay, sharp, correct, and continue to keep dragging lower. So first target going to be that previous low, and if the sharp is going to be really strong, I'm anticipating a quick sharp, quick aggressive move over there. Okay, so if aggressive move's gonna be over there, that's not going to stop. Okay, then price gonna go all the way back to this previous low very, very aggressively, very sharply. All right, so price gonna be aggressive to the downside all the way back to this previous low and gonna break down that previous low for more downside. So you're watching it to be aggressive. Right now price is not so aggressive, still struggling. All right, and caused by the Chinese government. Okay, they said that they're gonna go all in to support their markets. Because of that, we are having strength on the Australian dollar. So you are looking any quick fall over there. Right now we are having 15-minute correction over there. All right, and price is just trying to break down and continue to keep dragging more lower. So if it gets more sharper, all right, then pull back and continue to keep dragging lower. So if it doesn't, okay, if it does not fall very, very aggressively, then you are paying attention price to hold this previous top. Okay, do not go beyond that previous top and stay below that and fall down very, very aggressively to the downside. Okay, so same goes with the New Zealand dollar. Okay, so if I'm gonna pull out the weekly chart, as said, there is no reason yet for these currencies to rise very, very aggressively for upside. Okay, once Fed gonna roll back its policy, then we may see strength on these risk on currencies. Okay, then we may see a big drop on the dollar. So that's not there yet. Okay, so you are looking this to continue to keep dragging more lower all the way back to that previous low. So if I'm gonna look at the lower time frame, similar analysis, you are looking price to just stay below that previous top. All right, and this to continue to keep dragging more downside. All right, so this is the wave you are looking on the New Zealand dollar, US dollars. If I'm gonna look at the lower time frame, okay, so 15-minute correction already appeared over there, and breaking down, you are looking at sharp sell-off, correction, and continue to keep dragging more lower. If it doesn't fall sharply, okay, then the previous top to hold. This daily 4-hour time frame top, previous impulse to hold. All right, this previous top to hold and price to continue to keep falling to the downside. All right, so if I'm gonna look at the dollar CAD, okay, so dollar CAD to bounce off from that previous low and continue to keep rising for more upside. All right, so hold this previous low and continue to keep rising all the way back to this previous top. All right, so we may see more upside on it. Okay, but right now, as we know that oil is driving CAD stronger. Okay, so there are also a lot of fundamental reasons, for dollar to stay strong. All right, so that's what you are looking. So balance sheet reduction going to be a strong driver for the dollar. All right, so pound dollar. Okay, so pound dollar is almost about to finish its, a bearish wave, and we may see a bigger correction very soon on it. All right, so like that, this bigger correction, this daily correction is just due on the pound dollar. Okay, so I still see a short term one more leg lower. All right, so you can look for that, but make sure you trade with precautions. Okay, because the correction is due, and the bigger daily correction. Okay, and it can reverse back to the upside very, very aggressively. So trade with care, okay, and use proper risk reward ratio. Okay, so you're paying attention at this area and looking for this trade first, price to just tag this previous low, and in best case scenario, break down and continue to keep dragging more lower for next leg. All right, so and once price gonna finish that move, start looking for this to go back up for another bigger daily correction. So the dollar yen, okay, so dollar yen is about to finish its weekly wave. Okay, so last time when Fed started to tighten their policy, we have seen a huge drop on dollar yen. All right, so if I'm gonna look at this and search the dollar yen chart, all right, and gonna look at the past data, past behavior of the dollar yen. Okay, so after having shock or recessions, dollar yen never went above the price which we have seen during the recessions. Okay, so in there were many other reasons as well in 1970. Okay, 1970 or 1975. Okay, Fed was raising the interest rates, and because of that hit the recession. Okay, we have seen a huge drop. And then Paul Volcker era there, okay, when Paul Volcker was trying to bring the inflation down, okay, dollar went higher, got stronger, we had the recessions, okay, and then again dollar started to fall sharply. All right, then in 90, dollar went higher against the yen, again recession hit. Okay, then dollar again went lower against the yen. All right, so we got some strength again on the dollar. In 2000 we got the dot-com bubble, dollar went again. All right, in 2007 Lehman Brothers crisis, housing market crashed. All right, dollar yen again went lower. In 2020, March 2020, crash, pandemic. All right, so again dollar yen went lower. So right now yield inversion is telling us that we are going to see another shock very soon. All right, and the dollar yen is already priced in aggressively, sharply for that move, the move which we are having on the dollar yen. Okay, from there to current price, that's almost reached. All right, okay, that's almost reached on 120. So is it possible for the dollar yen to reach up to these prices, okay, these tops? I don't think so that the dollar yen gonna go that much far away. Okay, and the reason is very much simple. So yield has to go out of the box. All right, so the 2-year yield and 10-year yields. All right, so this US 10-year yield has to go above the 220 or 225 sharply. It should go above aggressively and tag that previous top. All right, I don't see that that's going to happen. If this is going to happen, then we may have deep inversion on the 210. All right, so I see that the 2-year yield gonna slightly go beyond that 2%. All right, and in worst case scenario, 50 basis point, 250. All right, and again gonna start falling to the downside, and that's the trend. Okay, and that's the longer term trend which we are having on the yields. All right, so it's almost 43 years trend. All right, so yields are falling. All right, and I don't think so we are going to see break out of that previous top. Right, that's far away. So I don't think so dollar yen gonna go that much far away, and we're gonna have again crisis, and that gonna cause the yen to get stronger for longer term, and a big drop on the dollar yen. Okay, and that big drop can break down this previous low this time. Okay, we may see breakout of this previous low, and it can go much deeper than that. Okay, and the yield curve is telling, all right, so the yield curve is telling us this. Okay, so this yield curve is telling us this. There is no more room for the yields to run for more upside. Okay, 210 at a 10-year yields less likely going to go higher than 250. Similarly to 2-year, less likely going to go above 250. We're going to find their tops where they are right now, and they're going to start falling. Yeah, whatever Fed is doing right now, they're simply doing a mistake. Okay, and dollar yen gonna go for a big drop from that current price, and we're gonna have a huge move. Okay, like we have seen previously. The historical chart is telling us, okay, this historical chart is telling us that we're gonna have a big drop on the dollar yen, like that, like this big run. Okay, so if I'm gonna look at this chart, then the wave we're gonna look for gonna be something like that. Okay, this ABC move to drop very aggressively to the downside. All right. So right now, as said, Fed is still hawkish. Okay, they are trying to structure their balance sheet reduction. So that's a bullish sign for the dollar, as said. Okay, that's going to be a still bullish story for the dollar to stay strong. All right, but that action from the Fed, okay, going to create problems for the economy, going to slow down, economy very aggressively, and then, we're going to see a big drop all the way, back to this previous low or lower than that. So that's a longer term picture. I don't think so that dollar yen gonna tag these areas or gonna go above that, even if it is going above that or testing these areas. Okay, this is gonna be a longer term bearish story. That's not going to change the bigger picture, which we're gonna see in next 1 to 2 years. So if I'm gonna look at the lower time frame, okay, so we had the possibility for another leg higher last week because of the Fed. All right, so we have seen, another leg higher. So right now, I'm looking for this to drop very aggressively. Okay, so right now, there is no reason for the dollar yen to drop very aggressively to the downside. Okay, as we know that, as we know that, Bank of Japan, they are buying more bonds. Okay, means creating more money. That's causing the yen to stay weaker. All right, while the other safe havens, they are surging, the gold surging, chief surging, all right, silver surging, other metals are surging, all right, and yen is just falling, all right, so going against the market right now. But the weaker the yen gonna be, the bigger the potential gonna be over time on the yen for longer term. Okay, so right now, there is no reason for the dollar yen to fall very reverse for longer term. All right, but we may see a bigger daily correction over there like that. Okay, like this one. Okay, like this one, and that might find, and we may see a top over there. Okay, within close to 120 for longer term to the downside. All right, so what you are looking for, the question is what you are looking for. So you shouldn't be a buyer over there. If you are buying dollar yen at the current price, okay, so a bit risky. So what you should simply wait for price to fall very aggressively. It's struggling to push more higher, still bullish. We can see over there is no sign at all for the drop on the dollar yen. Still a short-term bullish, staying above the trend. So we may see another push, small push over there. All right, so we may see other push like that. And once you see that the price is, falling sharply from the previous top or after forming new high and going down very aggressively, okay, then you are looking it to find a top over there. So right now there is any price action for a big drop over there, and once you see that it's coming out, it's going to be a longer term, trade to the downside. Okay, so last time, which I was, trying to explain over there. So last time when Fed went for a hiking cycle, okay, that's what happened. We have seen reversal, a longer term reversal on the dollar yen. Okay, in 2015, Fed started to raise the interest rate. 16 December 2015. Okay, when the first hike came over there. Okay, and then it never looked back. Okay, then it never looked back at that time. And it was just keep falling. So we're going to have similar, wave over there on the dollar yen. Because market is just preparing for that right now, like that, okay? This is what we were expecting after the Fed rate decision, all right? But we haven't got that because Fed was too dovish. So this is what you are looking again on the dollar yen, all right? And dollar chief, went higher for short term, all right, and longer term still looking for the dollar shift to go that much far away, all right. So this top still possible. So right now dollar shift to just simply fall back, all right, and continue to keep dragging more lower back within these areas. Okay, so slowly keep dragging more lower, and then continue to keep rising. Not a best pair right now, and I don't think you should chase it right now. Okay, it's not a best pair, so just keep dragging lower slowly. Just let that to do that. All right, so if I'm gonna look at the other pairs, all right, so the pairs we are looking right now, the important pairs are the yen pairs. Okay, so we're gonna look at them. So chief yen, euro chief. Okay, so last week we were talking about euro chief to continue its trend or go down for $1 mark and then reverse. So it slightly went higher last week, all right, and right now it's trying to fall back. So that's the last week where price were. Okay, another leg higher. At that correction, we are having that another leg. All right, so this might be another correction. This might be another correction for more upside on the euro chief. Okay, and I don't think so you should chase that. Okay, this might be another correction. You see there was a buy signal over there and breakout for another leg. Okay, this might be a continuation signal for another leg higher. All right, so I don't think so you should chase that. So better to wait for the euro chief to fall down, test that $1 mark again, and you are looking for a longer term reversal on it. All right, and if don't want to wait for that, then you are paying attention at these areas, okay, or that correction to hold 4-hour time frame moving averages and continue to keep rising from this for more upside. All right, so if you are a short-term trader, then you are paying attention over there on 4-hour time frame, and if you are a longer-term trader, okay, looking for a big move and looking to hold that, then better to let the price test that $1 mark, and then you are looking it to reverse for longer term for more upside. All right, test that and then reverse for more upside. All right, so that's the euro chief. So Kiwi yen. All right, so why we are staying, bullish on the yen pairs? So the reason I have just simply explained to you guys, yields extremely priced in, all right, for the Fed hiking cycle, all right, and we are having inverted yield curves, all right, that's sending a signal for something else, all right. Yield curve inversion are telling us that, we are going to see recession in next couple of months, all right, and once market gonna start understanding that, yes, we are having peak in growth, okay, and market is going for the recession, okay, then we're gonna have a bigger wave like that, okay, and that wave not gonna happen within 1 week or 2 weeks, all right, so that's gonna take a lot of time. Okay, so last time when they raised interest rate, when Fed raised the interest rate, it was somewhere there, the 16th of December, all right, so 16th of December, these areas, okay, and then after that we have seen a huge rally on the yen, okay, and price remained yen remained bullish for almost 1550 days, all right, remain bullish. Okay, so once that we're gonna start, it's not gonna happen within 1 day, so that's gonna be less likely. Okay, so even if that's going to happen, okay, so still gonna take a lot of time, look at that, 550 days. So that's the reason we are staying bullish on the dollar yen. Every time when we see that the dollar yen is just we are bullish on the yen, whenever we see that the yen is losing its value, pulling back, okay, we are looking it to fall aggressively and continue to keep dragging more lower for longer term and give us a longer term fall. All right, so fundamentals are not supporting for yen to keep falling for longer term, all right, as we can see that the yields are topping out over there. Okay, so what you are looking this week on the Kiwi, you are looking Kiwi to fall aggressively to the downside. So last week we were expecting sharp sell-off over there. We haven't seen that. Price was just keep pushing more higher. We haven't seen that set up, and price just went back to that top. And if you remember that, I have told you in the previous weekly market outlook that this possibility exists over there, okay, because Kiwi yen was behind the other pairs, and there was the possibility that the Kiwi yen can continue to keep pushing more higher and can test that previous top. Okay, there is still possibility that the Kiwi yen can slightly go higher than this previous top before going to drop. Okay, there is possibility that the Kiwi yen can extend slightly above that. That pattern is telling us, all right, another small push up can possible before going to have a big drop over there, all right, like that. So what you are looking, you are simply looking very much similar kind of price action which I have shown on the, you know, dollar yen or Kiwi pairs. Okay, right now they are still bullish, similar like the dollar yen. You are paying attention every time when they are forming new high and watching very aggressive move to the downside. Okay, trying to break down, it's trying to break down, all right, so but move is very slow, not so aggressive, not sharply. Okay, so break down and continue and correct and continue to keep dragging more downside. All right, so that's what you are looking on the Kiwi yen. All right, so it has just broken down that 15-minute trend right now. Okay, we can see that the 15-minute trend is just broken out. Right, and they are trying to push lower. So you're paying attention on all these corrections which are just appearing over there, and price to fall very aggressively to the downside. Okay, all these corrections. So if it does not fall very aggressively to the downside, okay, then you know, keep eye on this previous top at this area and wait for the price to hold that, okay, and fall very aggressively to the downside from these tops. Okay, we still see potential on the yen pairs for longer term. All right, so same goes with this chart. We have seen, we were expecting it to break down from there. Okay, we got, you know, small moves on lower time frame. Okay, but we haven't got the wave which we were looking for. Okay, it went higher within these. We got small moves, all right, but we didn't got the wave, the daily wave which we were expecting over there to appear on the Aussie yen. So similar analysis, similar structure like the yields. Okay. If I'm going to pull out this chart on my, you know, 10-year yield. Okay, so the pattern is very much similar like the yields, all right? So we have seen, you know, a flat formation over there on the Aussie yen, and we have seen a contracting flat or ABC move, we can say there, and the next leg happened over there on the yields. Okay, on US 10-year yield went higher. Similarly, we have seen another risk on move on the Aussie yen. Okay, so higher rates are driving the yen to lower right now. Okay, like I have shown you the yields, past price, you know, behavior on the yield curves and US treasuries. All right, so they are telling us that we are, you know, topping out over there. This might be a top on the US 10-year yields for longer term because yield curve is inverting. Yield curve is telling us that more upside is limited. Fed is there, we can see. Okay, so this is already inverted. So that's what we're gonna have in longer term. All right, where the yield curves are going. Because the dollar yen is right now pushing more higher. Aussie yen pushing more higher. This is what we're going to have in longer term. All right, a big drop which is on its way, and yields are topping out. 10.5 is already inverted, running below zero. Okay, 10.2 is going to be the next. Same pattern is there on US 10-year yield. US 10-year yield is just trying to find its top over there. All right, even after having Fed hiking cycle. Okay, so the next leg we are looking is the bigger next leg back to this previous low on Aussie yen. Okay, so if I'm gonna look at the lower time frame, we have seen a quick sharp sell-off on the oil, all right, and we may see similar kind of sharp sell on these risk on assets too, right? So the leg you are looking is this week to go at least first of all this, okay, so this arrow where the arrow is showing this to visit up to 85, all right, or in best case scenario 84, yeah, 84, and in ideal case, okay, where the yields are pointing right now, yield curves are pointing right now, another recession. So if I'm gonna look at the lower time frame, analysis is very much similar like the other yen pairs. Okay, so you're trying to catch the top on the Aussie yen and Kiwi yen. So if I'm gonna compare Aussie yen and Kiwi yen, okay, so the Kiwi yen gonna be the less risky chart as with compared to the Aussie yen, because Aussie having some commodities back in, and Aussie staying strong because of the higher commodities prices, okay. And the other reason why Aussie is staying strong, because Reserve Bank of Australia hasn't raised the interest rate yet, while the other central banks, they have raised the interest rate, like New Zealand, all right, they have raised the interest rate, Fed, they have raised the interest rate, Bank of England, they have raised the interest rates, all right. So the currencies which are having higher yield right now, okay, so they have already priced in for those hikings, for higher yields, they have already priced in. But the currency which haven't, which are pricing in right now is the Australian dollar, because Reserve Bank of Australia hasn't raised the interest rate yet, all right. And how hawkish they're going to be, market is just trying to catch up those things. So if I'm going to compare Australian dollar and yen with the New Zealand dollar and yen, so the New Zealand dollar and yen going to be much better as with compared to the Aussie yen, all right. But the risk on the Kiwi yen is that Kiwi yen still can push more higher and can go beyond the previous top like the Aussie yen has done, all right. So whatever happens, okay, wherever they are right now, you are simply looking for them to just simply fall very, very aggressively and find their top, their multi-year top, and keep dragging more lower for longer term. And once you see that the corrections are just appearing over there, keep adding on them for longer term to the downside. Okay, so you are simply looking for that 15-minute corrections which have already broken out over there, all right, and another one to form, and price to just keep crashing aggressively to the downside. So this week, I'm anticipating that Aussie yen at least gonna visit this low. All right, so at least we can have, price there at 85 this week on the Aussie yen and Kiwi yen too. Okay, so they took off last week from this area. Okay, so this week in the half of the week we're gonna have prices there, and maybe on Thursday and Friday we may see another pullback somewhere, something like that. So you are looking them to find the top and fall very, very aggressively and give you a drop. So last time when Fed raised the interest rate, okay, prices were there, right? So 16th of December, and after that 16th of December we have seen a huge run, okay, there within these areas, within these prices. So 16th of December was there. So we may see, again, a big drop over there on these pairs, because hiking cycle is just priced in, priced in sharply. Prices are priced in, and the Fed is behind the curve. So we have seen Aussie dollar, US dollar, Kiwi dollar, US dollar. So Euro yen. Okay, so Euro yen also can fall. This week we may see a quick drop. Last week we were expecting it to pull back up to 61. So it has retraced more than that. So it has retraced up to 78%. Okay, so I see this to break down a very sharp move we have seen. Again, as I said, guys, this sharp move is driven by the yields. Okay, these sharp moves, that sharp move is driven by the higher yields, right? And as I said, we may see top on the yields. Okay, and you are simply looking for this to drop to, right? Again, there is possibility for another leg higher. okay, because it's just correcting, and we may see another push up, small push up before going to drop. Okay, another push up and price can retest the previous top. Okay, but this is the wave you are looking for, a quick sharp sell off. All right, so this is what you're looking. So euro yen, euro dollar, as said, breakout and continue. Okay, so Kiwi CAD also breakout and continue, a daily wave over there. Okay, so this is the wave you are looking. Okay, this to continue and keep dragging lower, break the previous low. And these two charts are much, better right now as with compared to the yen pairs. All right, where is the yen right now? Okay, so yen is there. Okay, yen pairs are there right now. They are struggling at this top. Okay, and the wave which we're gonna have on the yen pair is gonna be that. All right, so that's the wave. So we have seen we are within that cycle on the yen pairs right now. All right, so this is following the yield curve. Okay, yield curve went higher, steepener, and then started to collapse, inverted. All right, and they are following, Kiwi is following the, Kiwi CAD is following the inverted yield curve. So this is what you are looking this week. All right, and this expanding triangle is just trying to find its top over there. Last week we have spoken about that correction, if you remember. All right, that correction can appear over there. Okay, so if I'm gonna pull out my, moving averages, all right, so moving averages are not clear over there. So you are simply looking that expanding triangle to break down and continue to keep dragging more lower. Okay, so if I'm gonna pull out this is the top you are watching for entries. All right, and the wave you are looking is this. Okay, just simply fall aggressively, sharp fall, quick fall all the way back to that previous low. All right, so the wave is already begun from that previous top, this area. All right, we need a continuation, sharp continuation all the way back to this previous low. All right, so there you are paying attention at these areas. Okay, so same goes with the Uzi CAD. It's just trying to break out, and the daily wave is also bearish. Okay, so Uzi CAD to fall aggressively to the downside. So if I'm gonna look at the 4-hour time frame, breakout is just trying to happen over there. So you are simply paying attention this breakout to continue. So if I'm gonna remove that. Okay, so we had that correction, the correction which we were talking about that last week there, okay, but price just went lower and then pulled back. So 5-wave pullback happened over there. So you are simply paying attention at this previous top during the week, all right, and break out and continue to keep dragging more lower. Okay, so what's going to be the worst scenario? That the price gonna visit this previous top. I'm not anticipating price to visit that top, but if it is going to visit that top, the bigger picture is still going to be the bearish. That's not going to change. All right, so Uzi CAD is also similar like that. And Euro Oz. All right, so Euro Oz is also same like the last week. Reversal, a big weekly reversal. This is the breakout you are looking. Last week we got a breakout on it, all right, and price just simply went higher for another leg. So last week we were expecting this breakout of this correction. Okay, so we got a breakout and price just went higher. So price is already breaking out, trying to break out. You are paying attention at this previous low closely, and price to just continue to keep pushing more higher. All right, hold that previous low. Breakout is already trying to happen and continue. So there is a possibility that the price gonna visit this previous low. Okay, it can break down and can visit that previous low, but again, gonna be a bullish story. Okay, once you're gonna get into the trade, you're looking price, you're looking your stop placement somewhere there behind that. Okay, behind that within these areas, and looking this to continue to keep pushing more higher that wave. So breakout is already happened. We were expecting this to hold this previous low. All right, but the breakout is really slow. All right, and as said, we need, you know, sharp sell-off across the market. Okay, so that's only going to bring a quick rise on it. All right, so any pullback you see on these lower time frame, you are looking these to break out and continue. This 5-minute time frame, correction to break out and continue to keep pushing more higher. All right, so like that. So same goes with this chart. Euro New Zealand dollar also broke out last week, and we are looking this to reverse for a big move for the upside. So if I'm gonna look at the 1 hour time frame, again this also carry a risk for another leg lower. Right, this one more leg lower can happen, but again the bullish picture going to be the upside. So the price you are watching is this. All right, the price you are watching is this, and looking for this to continue very much similar like the Euro Oz. So pound Australian dollar also, you are looking this buy opportunity right now. Okay, this to go back up this top. Last week we were expecting this to break out this flag. Okay, it broke out, went higher, but then again reversed after the Bank of England rate hikes. Okay, so if I'm gonna pull out bigger time frame, okay, so the way which we are looking is this, the big leg higher. Okay, so remember we were expecting it to draw from this previous top. All right, this leg which we had over there, we were expecting this to break out. All right, so this was really sharp because of the crisis which we have just seen in the Europe. Because of that, everyone was just getting out from the Europe. They were selling the pound, selling the euro, and selling the other European assets. All right, that caused the sharp sell-off. All right, so confidence is just building back on the EU, and also we can say that ECB is turning hawkish, turning after, trying to go back to the inflation. And that's also gonna, build the confidence in the Europe. Okay, and we may see strength on the pound and on the euro as well in longer term. Okay, so the move you are looking on the euro, on the pound Australian dollar is the bullish. Okay, but make sure you understand that the extreme price still can reach over there up to 174. So use your risk reward ratio properly before you get into the trade. All right, and paying attention at the current price, and price to just simply bounce off today or tomorrow, whatever. Okay, and give you that for our move first, and in best case scenario a big run or upside. All right, so same goes with the pound New Zealand dollar. So let me check if I do have that. Okay, so same trade. You are looking on the pound New Zealand dollar, you are looking this trade first, okay, and in best case scenario keep rising very, very aggressively all the way back to that previous top. Right, so if I'm gonna look at the bigger daily time frame, similar structure, it carry risk to push slightly more lower before going to reverse for longer term for upside. Okay, so keep that thing in mind when you're gonna start looking for buy. So you are paying attention on this current support price, which is just trying to hold and it to break out sharply and continue to keep pushing more higher back to these areas. So if I'm going to look at the lower time frame, 5 minute, okay, very much similar price action which we have just seen on the Euro New Zealand dollar and Euro Australian dollar. Okay, so one of them, strength on one of them obviously going to push the others higher too. All right, so or if one goes higher very, very aggressively, let's say pound rise against the Australian dollar, or pound rise against the New Zealand dollar, or euro rise against the New Zealand dollar or Australian dollar, all right, or chief rise again, any of these commodities currencies, okay, they're gonna rise. I mean, they're gonna fall across the market. So you're looking all these lower time frame corrections very, very closely for more upside. Okay, so CAD yen also similar like the New Zealand dollar, New Zealand yen and Aussie yen. You're looking for a quick sharp breakout. So this week I'm anticipating this pair to at least test that previous low. All right, this previous low, or at least that price. Okay, so similar structure like the US Treasuries. All right, US 10-year yield, it's doing similarly, broke the previous top and formed new high. So as we're expecting yield to top out, okay, if they topped out, then we're gonna have a big, highly likely they are topping out. All right, so US yields are topping out. If they are not topping out, then 10-year yield has to fall very, very aggressively for Fed to get out from this inversion. All right, And US 10-year yield is not that much volatile. Okay, it's a very stable, bond. US 10-year, treasuries, T-notes are very stable. We don't see sharp moves on them I mean, we don't have a lot of supply of them, okay? And there are always going to be demand for the T-notes, all right? And that's the reason they are very, very stable. So 2-year yields cannot stay above that 10-year yields for longer term, all right? So the extreme scenario is going to be 1%, all right? The extreme scenario is going to be 1%, yeah? So it means 3%. If 2-year yield is, keep pushing more higher, then extremely it can go beyond 10-year is one with the 1%. Okay, but again, it's going to fall very, very aggressively to the downside because Fed cannot keep raising the interest rate when yield curve is inverted. All right, so they are topping out. We are looking for a big drop on them, and on lower time frame, a quick sharp sell-off like others. If I'm going to look at the 15-minute time frame, and similar structure, right? So similarly, like 15-minute time frame is just trying to break out, and you're looking these, looking for another 15-minute correction. We don't have a 15-minute correction over there on the CAD yen, okay, but you're looking this to form a 15-minute correction and a sharp sell-off. Okay, there is no more upside at the moment on them, okay, and they're struggling. We can see over there divergence is just getting strong day by day on them. The higher they goes, okay, so the divergence is just simply getting strong on yen pairs. That's what the divergence is telling us. Okay, this divergence is telling us that things are not going to. All right, so there we can see divergence is just happening on this chart. Okay, so there you see clearly on the pound yen. Pound yen is also showing divergence. A very strong divergence is there. This divergence is going to play out. All right, that's for sure. This divergence will play out, and when this will play out, you will see a quick drop on them, and then that's going to be a longer term, trend. All right, like this chart. All right, this is the next wave which we're going to have, guys. So US, Euro is telling us that what we are going to see. That's the wave they're going to give you. All right, a bigger weekly wave going to happen over there. So it's a matter of time. All right, it's a matter of time. Right now, maybe you are going against the market, okay, but once the bigger weekly wave going to trigger, it's not going to look back and going to keep dropping for longer term to the downside. So trade with care, use proper risk reward ratio, get into the market on time. All right, once you got a top, hold that for longer term. All right, and if it does not continue, you can take off your profit, or you can, let the market stop you out on break even, or let the market stop you out on your stop. Okay, so use proper risk reward ratio rather than just, opening a trade over there blindly and letting that trade to run. Okay, so use proper risk reward ratio when you are dealing with the yen pairs. All right, so pound yen, we have also similar, scenario. Okay, there is possibility that the pound yen can slightly push more higher. I don't see right now that the pound yen gonna break out that previous top, but that risk exists over there when you are trying to get into the trade on the pound yen. Just make sure you keep that thing in mind, that the price still can slightly push more higher. So what I see a quick aggressive drop is just coming out over there. All right, like that drop. Okay, yen has to get stronger. So you let the market give you a 15-minute correction. All right, 15 to 1 hour time frame correction to appear over there and then continue. All right, so if they do not continue, then they're going to be a short term one more up leg possibility. Okay, so like that, and if they go for another 1 hour time frame leg, then you are looking for another leg to finish from the previous top and then drop. Okay, so just simply watch that structure. All right, another leg higher and then drop, or keep dropping sharply from the current price. Okay, so dollar yen, NOK I'm going to ignore. Chief yen I'm going to ignore. All right, so Uzi Chief. So chief yen is also similar like the dollar yen. Okay, so it has to fall for a bigger time. So Aussie chief. So Aussie chief is also gonna be a next leg lower. And if I'm gonna look at the lower time frame, it has already broken out. All right, so last week we were expecting it to form a flare formation. Okay, there, this wave to continue to keep dragging lower, hold that floor and go back up and then drop. Okay, so we have seen this one more leg. We were not anticipating that to happen, guys. Okay, the reason was the all-out support from Chinese government. Okay, that caused the Aussie to get a bit more stronger. All right, but right now it has almost finished its bullish wave. All right, the lower the Aussie goes against the chief, okay, then you are watching the Aussie to fall across the market. Okay, so the way which we are looking is this all the way back to that low or breakdown of that previous low. So if I'm gonna look at the lower time frame, the 1 hour time frame correction appeared, broken out, all right, and price is just trying to form another one over there. All right, so let's look at the lower time frame. So 15-minute time frame. So you are watching for another pullback. All right, so price to pull back there and hold these areas. Okay, hold these areas or stay below that top. All right, stay below that top, stay below that 69.50. All right, and then continue to keep dragging lower for that daily drop. Okay, this daily drop, we may see new low on it. Right, so there is a risk for that move to happen. All right, this move very much similar like the New Zealand dollar and yen chart. Okay, if you remember that. All right, there is a risk for that wave to happen, but I don't think so that the chief gonna lose its value that much quickly, the way we have seen weaknesses on the yen. Okay, the reason why yen went lower so aggressively because Bank of Japan is just buying unlimited bond. All right, and Bank of Swiss National Bank is not doing that. Okay, which is causing the chief to stay bit more stronger. All right, so we are having rate decision on the Swiss National Bank on chief this week. Swiss National Bank is going to announce its policy rate decision. If they are going to be dovish, then we may see some strength on the chief. Okay, then this possibility going to be exist over there. So why I'm saying that, why I'm telling you that, okay, when you're going to get into the trade, make sure your stop loss is just properly placed over there behind that top once you're going to get into the trade. Okay, in case if it just rise aggressively for upside, you are not into the market. All right. So oil. All right, so oil is very uncertain. All right, so as you guys know that what's happening around the world. All right, and there are still talks going on. I mean, you know that, guys, what's happening right now. I hope that you are following the news. All right, we are having similar kind of situation right now, which we have seen, in 1970, oil embargo. Okay, when Israel invaded in the surrounding or started war with the neighboring countries. All right, neighboring Middle East countries, and the neighboring Middle East countries went war with Israel. Okay, and US was behind the Israel at that time. Okay, and what happened because of that war, all right, Arab nation countries which were producing oil at that time, okay, they put oil embargo on the US. They stopped giving oil to the US. All right, and because of that, we have seen limited oil supply that caused the oil prices to just explode. All right, and inflation went higher, and similar scenario we are having right now. Okay, Boris Johnson went to the UAE and was trying to convince them to raise the oil output, but they denied. All right, Biden called to the Saudis and UAE and was trying to convince them to raise the oil output and trying to convince them that they're gonna US gonna give them security, gonna be on their side for the Yemen war. All right, but they did not, pick up Biden call. All right, but they are constantly in contact with the Putin. All right, so right now Putin is driving the, or we can say that OPEC countries are, not raising the oil output. Even, West is putting pressure on them to do that, so they are not raising the oil output. Okay, and on top of that, we are having Ukraine war, and West is trying to move away from Russian oil and Russian gas supply. All right, or we can say that, Europe is trying to, put embargo on themselves by, not buying gas and oil from the Russia. So this is highly uncertain market. All right, so early on there was news that Europe is still looking to sanction the Russian oil and gas which they are taking from Russia for the Europe. Right, if that happens, this is again going to be a bullish story for the oil and natural gas and other energy assets. Okay, so this is very highly uncertain market. So West is trying to put pressure on the China and asking them to mediate and stop Putin from this war, putting pressure on the Middle East countries. But right now, no one is listening to the West, right? And West is having, energy shock, and these assets are rising because of that. So market is highly uncertain, all right? Highly uncertain. Any news can come out and can move the market, and liquidity is also very thin over there at such prices. Okay, so if you are trading on oil these days, okay, so trade with all precautions. All right, margin requirements are also high, and volatility is very high, and risk is also very high. All right, even with the potential is also high, okay, but risk is also very high. So at the start of the meeting, at the start of this outlook, I have shown you yield curve chart. Okay, so yield curve chart is telling us that we are going to see this kind of crash. Okay, this kind of crash on commodities. If I'm gonna pull out the yield curve chart with next to the oil chart. All right, let's look at this, which have already inverted. Okay, so if I'm gonna look at this and gonna look at this. Okay, oil was 147, and once we have seen, and yield curve was almost sitting at there. All right, sitting at there. So yield curve has already given us a signal there that the risk on assets were about to crash. Oil was about to crash. This move is going to come. Okay, they're within these areas. Okay, so this is the time period. Okay, this is the time period which took, if I'm gonna pull out Fed fund rates on it. All right, so this is where Fed started to raise the interest rate. Okay, when they were raising the interest rate, yield curves were going down, get inverted. All right, Fed was ahead the curve. Okay, and after 581 days, this hiking started to play out, or Fed was curbing the demand by raising the interest rate. Then they started to play out and oil crashed. So we are going to see similar thing again. Okay, so similar scenario going to happen over there again. Okay, so yield curves already inverted. They are telling us that the crash going to be over there. Okay, it's a matter of time. Already inverted. Okay, they are telling us that this is gonna be the next move for future. Right now they are bullish, okay, for short term, but longer term, that's what's gonna happen. They're not gonna sustain these prices. Okay, but right now we were expecting last week price to just, you know, hold these areas and continue. Okay, but it went lower, tested that top, and then, you know, right now it's just pushing more higher. So as I said, the oil market is highly uncertain, all right, moving very, very aggressively. So what I see that oil still can, you know, slowly push up on this 15-minute time frame. Okay, still can stay short-term bullish, all right, and can break out for this trend, the trend which we are having right now. Okay, there is a chance that oil still can visit that previous top. I don't see right now, okay, I don't see any, you know, chance for the oil to visit that previous top. Okay, but as I said, oil market is highly uncertain. Anything can happen, any kind of news can come out and can you know, move the market. So still short-term bullish. We may see a couple of more push-up. Okay, but once this trend, okay, this trend which is just over there, so once that trend gonna break out, price may fall back to this previous low. So short-term still bullish as long as price stay above those moving averages. The trend is short-term bullish. Okay, like this. Let's look at the 15-minute time frame. Trend is still bullish. All right, another short-term, one more bullish leg. This correction to finish over there, which is trying to appear over there, and one more up leg. All right, so make sure you trade with care. Price to just pull back, hold those moving averages, okay, and break out for another leg. Short term, and if it keeps pushing more higher, then continue to keep pushing more higher. Okay, and once this trend break out sharply, okay, then continue to keep dragging more lower. Okay, so very uncertain market. If you're trading, trade with care. If you're not trading, there are many other assets where you can trade. Okay, so the risk is very much high over there on oil prices right now. All right, so same goes with the UK oil. The UK oil is also same. I don't think so. I need to talk about that a lot. Okay, so similar scenario. So the longer term move gonna be this. Okay, I don't think so we're gonna have zero again. Okay, but somewhere close to the average price. Bitcoin, very much similar scenario like last week. All right, it's pushing more higher. It didn't test that previous low which we were talking about in the previous weekly market outlook, and went higher for the triangle. Okay, go more higher and hold that previous top. So very important question, guys, when you should look for Bitcoin to continue for another leg higher, when you should start looking for Bitcoin to continue to keep pushing more higher. All right, so as you know that Bitcoin is a inflationary asset. All right, when we see that inflation is coming out, it's just, you know, spiking up very, very aggressively. All right, so I don't think so we're gonna have next run on the Bitcoin anytime soon, as fundamentals are not pointing out that to happen. All right, so you know, yeah, people are talking about this one more leg. I don't see right now any reason for that. Okay, but let's just talk about another thing. Okay, so if I'm gonna look at this 10, all right, so if I'm gonna pull out 2 year Fed funds, US 2 year. All right, so okay, so right now we are behind the curve. Fed is behind the curve. Okay, they raised the interest rate already, and there is a very good chance that they're gonna raise the interest rate with 50 basis point next meeting. Okay, 50 basis point is still on the table. 50 basis point hike is still on the table. So, you know, I don't see that the Bitcoin gonna continue for another leg till Fed, get ahead of that curve. All right, I don't see that the Bitcoin gonna continue its bullish leg till Fed get ahead of that curve. Okay, they can get ahead of that curve within next 2 to 3 months. Okay, if they raise the interest rate very quickly, let's say 50 basis point, all right, and try to get ahead of that curve in next couple of meetings, all right. And yeah, so let's bring that Fed fund rates close to 150, all right, 175 within these areas. If not ahead of that curve, as at least close to that curve, all right. Once they get ahead of that curve, okay, then they're gonna start, again giving some room to their policy, all right, and gonna start. Room means again loose policy, all right. Then we may see the next run on that. Okay, then we may see another, run on that. So till Fed is, fighting with inflation, raising the interest rate, bringing in the balance sheet down, okay, it means that they are taking the liquidity away from the market. All right, when Fed is taking the liquidity away from the market, trying to fight with the inflation, all right, the assets which are inflationary hedge, okay, they can struggle to continue their trend for more upside. Okay, so that's telling us that we may see sideways market. All right, we may see sideways market on Bitcoin rather than next bullish leg. Once Fed gonna ahead of the curve, okay, and gonna try to get out from the inversion, that's gonna be the time for the crypto market to continue its next bullish leg for upside. Okay, so we are almost 6 to 9 months away from that scenario. And if anything happened during that and crypto rise because of that, I don't see that possibility on the table yet. Okay, so what you are looking again, price to just stay within that triangle and tag the 30k mark. Okay, and from 30k mark to continue to keep pushing more higher. So divergence is just building over there for upside. Okay, let's look at the divergence. This is divergence is a good sign that the price, Bitcoin is trying to find its floor over there. So this is the divergence. Okay, there we see that the divergence is just being formed over there, appearing over there. That the price is just trying to divert for upside. All right, but as I said, the trend is not strong for upside. We don't have fundamental reasons. Okay, so inflation needs to come down, and the inflationary assets gonna stay under pressure. When inflation gonna come down, and once Fed gonna again give you room, all right, then we may see another leg higher. So 30k target, 30k mark is still on on table. Right there we can see that the weekly wave is completed. If you remember, when price was falling at this area somewhere there, okay, we were talking about that the weekly wave to finish, all right, these areas. So weekly wave is still there. We are still within that weekly wave. Okay, that weekly wave hasn't found its floor over there. So fundamental reasons are not there right now, which can drive the Bitcoin for more upside. All right, and also Fed is saying that they're gonna reduce the balance sheet. This is also not a bullish story. They are sucking the liquidity away from the market. Okay, taking the trying to remove the money supply from the market. So this is not a bullish story, bullish sign for the risk on assets. All right, so this is what you are looking. Hope that makes sense. So same goes with Ethereum. Okay, don't think I should talk about that a lot. Similar structure, the structure which we were talking about. Okay, it's going slowly back to that previous triangle top. All right, and once price find that top, then and another leg lower. Okay, test the 1800 low and then continue its bullish trend. BNB is also similar like that. Okay, so these are the very important charts. All right, so US 2-year and 10-year, very important charts to watch. All right, very important charts to watch right now. So yield curve is also important. We have seen drop on it up to 16 early morning. Okay, but it trying to reverse. It reversed aggressively for upside. Okay, so let's just talk about a different thing over here. All right, so if I'm gonna look at this clean chart, I'm gonna look at this. This is gonna be a good thing for you to learn, guys. So I'm gonna pull out Fed fund rates. And if I'm gonna pull out US 2-year, and if I'm gonna pull out US 10-year, all right, so there we can see, hopefully you see, whenever yield curve inverted, all right, so rates dropped since 1980. Okay, so since 1980, rates dropped. Okay, so there we can see at this area, yield curve inverted. All right, so 2-year went above the 10-year. All right, so there we can see at this area. So 2-year went above the 10-year. All right, so the Fed fund rates went lower. So let's check this color. Okay, so the orange is the Fed fund rates. Okay, so the orange is the Fed fund rates. This orange color is the Fed fund rate. All right, so there, orange is a Fed fund rate. All right, so yellow is a US 10-year. All right, so light blue or sky blue as a US 2-year yield. All right, and the other chart is the US 210 yield curve. Okay, so whenever we have seen inversion, okay, so rates went lower. Whenever we have seen that, that's the inversion. Okay, so rates went lower. There we can see. Okay, and that's the trend. Okay, that is the trend since 1980. That's the trend since 1980. We are having that trend. So again, this happened in 2000. All right, so that has happened in 1990 and 1982. There. Okay, so that trend started from there. So they dropped. Okay, again they dropped. All right, inversion happened here in 2007. Sign for a housing market bubble or Lehman Brothers crisis. Okay, they dropped. All right, just recently we have seen pandemic. All right, so yield curve inverted. So Fed, slash the rates back to zero. So they never went above when yield curve inverted since 1980. Okay, so what I'm saying that once we have inversion, okay, so the real rates never went above where they were during the inversion. Okay, so they have to drop. All right, they have to drop so that this inversion can reverse. So yield curve inversion can reverse. I guess hope that makes sense. So we are just about to see inversion again. Okay, there. We are just about to see inversion again. Okay, and Fed is behind the curve. They are not raising the rates quickly. So we are already having we are about to have inversion, even with 25 basis point hike. Okay, so what's going to happen? So rates going to find their top like they have done here, okay, in 2007 or in 2019, and then again going to fall. They're again going to fall like that. So top going to be somewhere there close to 2%, all right, or 250. Yeah, so Fed is targeting 280. I don't think so. I think Fed is just simply lying about that. They are not going to reach to that 2.80. Last time in 2017 they were saying that rates going to go up to 3%, okay, but they reversed from 250 at this area. Okay, they roll back from 250, and now they're saying that they're going to go up to 2.80. That's not going to happen. Okay, they will roll back, in my best guess, from 175. They're going to roll back their tightening cycle and going to go back to zero interest rate policy again, because they cannot keep raising the interest rate while we are having inverted yield curve. So this is very important. So rate might be topping out because yields are inverting. All right, for Fed to not for Fed to avoid that yield curve inversion, 10-year yield has to rise very, very aggressively. 10-year yields has to rise sharply. Okay, and in past we have seen that 10-year yields never done that. Okay, 10-year yields never went higher sharply. It's more stable, and the yield is being set by the market. Okay, and market believe that there is a red signal. Okay, market is going to we are going to see recession simply. All right, so very important charts to watch. Okay, so if I'm gonna look at the Nikkei, okay, now that make our case for the risk on assets. When you understand that, when you understand the bond market, okay, then the rest of the market gonna be easy for you to understand, to trade. All right, so that's telling us that the risk on assets gonna struggle. All right, so risk on assets gonna struggle. We may not see more upside or trend on risk on assets or equities. Okay, so as I said, okay, when they after bottoming out, okay, when they bottom, when we see inversion, okay, after that market takes some time to take effect. All right, so inversion means Fed is trying to curb on the demand, okay, but that takes time to play out, okay, that's take time to take effect. All right, until then we may see strength on the risk on assets. Okay, so risk on assets can stay stronger. You can buy the risk on assets for short term, but make sure you keep the risk in mind that crash can happen at any time. All right. Okay, so if I'm gonna look at the risk on assets, so that's the reason. Okay, last week we were expecting the risk on assets to jump from that previous floor. Okay, if you remember, we were expecting risk on assets to stay strong after the Fed rate decision. All right, so they can stay strong. All right, they can stay strong. Risk on assets can stay strong till the demand curve from the Fed play out. Okay, it may take 6 months, it may take 9 months, it may take 12 months, it may take 24 months. It depends on the Fed, how aggressively they are going to take actions. Okay, if they are going to be very, very aggressive, let's say with their balance sheet, okay, then we may see recession within the next 3 months. Yeah, stock market can continue its correction from more downside within the next 3 months. So it depends on the Fed, how aggressively they are going to wind up their balance sheet and going to raise the interest rates and going to get ahead of the curve. All right, so if they are going to be slow, all right, or trying to avoid any damages to the market, okay, which they have done last week, Fed wasn't so hawkish. All right, that's caused the risk on assets to stay strong. All right, and also we had support from the China. All right, so till the demand curve is not going to take effect, you can stay short to medium term bullish on the indices. All right, but keep that risk in mind that we may see crash. Okay, because yield curve is telling us, sending us that signal that crash can happen at any time. Okay, so as said, if Fed is going to be aggressive towards their balance sheet, this might be a top. Okay, for multi-years, this might be a top on US indices. We may not see that price again. Right, this might be a top, so keep that thing in mind. It depends on the Fed aggressiveness. Okay, so what to look for? All right, so you are still looking for the continuation for more upside. Okay, so test that top. All right, and I don't think so that Fed is going to damage the market. They will try whatever they can do to bring the inflation down while harming the market, right? While doing not damaging the market, okay? Because if they're gonna damage the market, then the risk gonna be so huge, okay? And it may take years to recover from that damages. All right, inflation is higher, no doubt about that, okay? But any wrong action from the Fed can cause severe pain to the market, okay? Unemployment gonna skyrocket it. So I don't think so they're gonna do that kind of thing. So risk on assets still bullish, all right? And what I see another leg lower right now, okay? Another leg lower to happen, and that leg to appear over there, and once you see that this leg comes out over there, you are still looking this to hold this previous floor or new low, and then continue to keep pushing more higher. Okay, there is possibility that we may not see that one more leg lower, okay, and S&P 500 gonna keep its bullish trend for more upside all the way back to that previous top, okay? For this leg, okay, I'm not interested within that leg. Possibility is there that it can continue to keep pushing more higher, okay? But the wave has already begun from that previous top, which I was talking about in the previous weekly market outlook. All right, it already bounced off from that previous low. So if you miss the bottom, all right, then you have to chase that for more upside, and risk is over there for another leg lower back to that previous low. So for that, what you are simply looking for your lower time frames. All right, so these 15-minute corrections, okay, let me check if I do have a clear no. The 15-minute time frame is the only chart where you can chase these 15-minute corrections, okay? Another pullback like that, okay, price to just simply fall back within these moving averages. During the New York session, if it keeps pushing more higher, then just keep pushing more higher. And if it breaks down that trend, specifically during the Powell speech, we are having Powell's speech at 4 today. So if Powell is going to say something and market is going to listen him and going to react to that, then we may see breakdown back to this previous low, okay? Otherwise, short-term continuation for more upside of these 15-minute continuations. You fall back, hold that, and continuation all the way back to the previous top. Hope that makes sense, guys. I'm looking another leg lower rather than continuation for more upside. So if you already caught the trade and looking to hold it for more upside, you are looking simply just continue to keep pushing more higher. All right, and if looking to trade now at the current price, okay, there is a risk for another leg lower. You have to trade on lower time frame, like 15-minute time frame, which I have just shown, and that to continue to keep pushing more higher. All right, if continue, you can stay in. If not, you can take out. All right, but there is a risk for another leg lower. Okay, so same goes with the Nasdaq 100 index. Okay, so last week we were talking about that the Nasdaq 100 index to bounce off, from this previous low, hold that previous low and bounce off from that previous low. It held, it bounced off, all right? And, similar scenario, similar structure like S&P 500. Okay, so we may see another leg lower. Okay, so structure is same. There is possibility for another leg lower, as risk is still there. So war, Ukraine war risk is still there. So that's what you are looking. So same goes with the 15-minute time frame, like I have shown on S&P 500. If it falls, test that low, hold that low, all right, or slightly go beyond that low, again continue. So stay bullish for longer term, for medium term, as long as yield curve is inverting and Fed is raising the rate slowly, or not going aggressive. So same goes with the Nikkei index. All right, so Nikkei index is also went higher. All right, so let's look at the lower time frame. So same again, I see another leg lower right now, but there is possibility that this can slightly keep pushing more higher. So do not chase that at the current prices. All right, so I still see another leg lower back to this previous low, okay, or similar analysis like S&P 500 or Nasdaq 100 index. All right, and dollar index, we have already seen that. Pound, CAD, all right, CAD chief is also a good chart to watch. All right, so it's just coming back to the previous top. All right, so if it has that top, this is going to be a great for the CAD to drop from that top. All right, and okay, so if test, then perfect. If it doesn't, all right, then you are looking these corrections to watch. All right, or simply looking to pay attention on these areas. Okay, if it tests that, you are looking it to drop, okay, or correct over there and continue to keep dragging lower. So in best price is that top 75. If it tests, gonna be a great price to short. But if it doesn't test that, then 74.40, right? So then 74.40 gonna be a good price to watch for the CAD chief to drop for longer term to the downside. All right. So EuroCAD, again, looking for this to break out for upside, all right, and still struggling to do that because of the energy crisis in the Europe, all right, and Europe is still struggling to find out the alternative of Russian gas and oil. Okay, so let's say, you know, if Ukraine and Russia, they find an agreement, all right, and you know, this war, Putin roll back this war, okay, and we see certainty, okay, then we may see jump into the Europe, into the euro can rise very, very aggressively, okay, because ECB still looking to raise the interest rate, looking to wind up their policy, going after the inflation. So we may see very, very aggressive move on the euro if this war is going to roll back, okay, not going to extend. All right, so drop, test this previous top, floor, and continue to keep rising. All right, or breakout very, very aggressively. So breakout only can happen in one scenario if war is going to roll back, okay, and we get a good outcome of that, you know, negotiations which we are having right now between Ukraine and Russia. So this daily to break out and continue to keep dragging lower, guys, all the way back to that previous low. All right, so you know, not a best place where you can chase it right now. All right, so last week we were expecting it to go for another, you know, leg higher for a 4-hour time frame correction and then break out. All right, so it went higher for another leg higher. All right, and now trying to break out. Okay, so you shouldn't chase it at the current price. Okay, there should be another leg, like that. Okay, and then it should continue to keep pushing more lower. So if I'm gonna pull out my daily time frame and gonna check the moving averages, another test of those moving averages on daily time frame is possible, okay, before going to continue to keep pushing more lower. This might be it for continuation to the downside. Okay, it may have tested for more downside to the downside, okay, for this next leg lower. But when we look at the other charts, they are suggesting us that you know, another leg is possible. All right, so this is what you are looking right now, not chasing it at current price, letting it to push up for another leg higher, staying within the daily moving averages, and continue its daily leg lower all the way up to this previous low. So there where you are paying attention. Okay, so move has already happened. The ABC move, which I was talking about in the previous week, yeah, happened, started to drag lower, right? But you shouldn't chase it at the current price because it can reverse. So if you're gonna buy, there is a chance for the breakout and continue to keep dragging more lower, all right? Or just simply stay away, okay? Or let this flat to form over there. Okay, so Uzi Chief, Kiwi Chief, they are still there. CAD Chief, they are still there. All right, you can watch Uzi Chief, you can watch Kiwi Chief, you can watch CAD Chief, all right? So CAD Chief is less risky, as you guys know that. CAD carry less risk, okay? Because movements are slow over there, and the trend is, you know, super cycle bearish. So you're not gonna hurt on that chart if that slightly goes higher. So this is what you are looking. If it is not pushing higher, continue to keep dragging more lower, all right, and then test that low, go back up, and then continue to keep dragging more lower. Okay, so Euro Pound is also going to be a bullish story, but if we have seen, if we see deal, agreement between Ukraine and Russia, so you shouldn't chase it at the current price. There is possibility for breakout at this leg, at this correction. All right, so this correction, that correction, there is possibility for that correction to break out for upside. All right, but I will suggest you to let the price fall back for another leg, and then you are looking it to continue for more upside. All right, or just simply pay attention at these areas. Look at these areas for more upside. Breakdown, then continue to keep dragging lower. Not a best trade right now, okay, but it can be a best trade once price gonna fall back to this previous low for longer term upside. Okay, you shouldn't chase it right now because it can go either way. It can fall, it can rise, so it can go either way. All right, when chart is not clear, you shouldn't chase it. Pound New Zealand dollar, we have already seen. Pound CAD is also going to be a buy opportunity. All right, so it is testing this previous low, so you are simply watching pound to bounce off very, very sharply, okay, and pound CAD to go back up within that bigger flag. So right now the price is still bearish, okay, and it's struggling to push slowly more downside. All right, so just simply watching this previous low, you paying attention at that previous low and looking for this wedge which is just there to break out sharply for upside and continue. Okay, break out sharply, correct, and go back up like it has done there. All right, like it has done there. So that's what you are looking. So the drop is slowing down. Okay, the effect which we have seen of the higher oil prices are Ukraine and Russian invasion of Ukraine. That was the effect of that. So that's just fading out now. Market is expecting that we're gonna have some kind of deal, or if we are not going to have a deal, then worst is just gone. Okay, the worst is just over. What is the next worst which can happen? If NATO is going to confront with the Russia, that's going to be the direct threat, not just to the Europe, to the whole world. Okay, so market gonna price in for that. Right now, market is not thinking that that's gonna happen, but if anything can happen, something like that, then market gonna start pricing in for that. All right, then what's gonna happen? EU currency is gonna go more downside for sharply. All right, and investors are gonna start finding safe havens on other currencies like yen, Australian dollar, New Zealand dollar, the way they have done in last 3-4 weeks. Okay, so similar pattern gonna be over there for safety. So this war uncertainty is still there. Okay, so you are looking this to break out. Again, this chart is very much similar like the Kiwi yen. Okay, there you see that the Kiwi yen is sitting at the previous top. All right, so testing that previous top. All right, and Kiwi Chief is also safe haven, yen is safe haven, and there is a risk for this move to continue to keep pushing more higher. So if we see sharp drop on the Kiwi or Uzi on any currency, all right, if any currency gets stronger against these two currencies, okay, then the leg which I'm showing over there, okay, on both currencies, on Kiwi against the yen and Kiwi against the Chief for this back to that low. Okay, but when you go after that Kiwi Chief trade, okay, so make sure you understand that there is still a divergence, all right? There is still a lag between these two charts. So it means that Chief can get weaker. We may see, another leg or more strength on the Kiwi. I'm not anticipating more strength on the Kiwi at the moment, all right? But make sure you understand that can happen when you are going to take these trades for more downside. So let's just look at the lower time frame, what you are watching. So you are watching similarly like I have shown on the Uzi Chief, a breakout and continuation for more downside, or CAD Chief. Okay, or let's just pull out some more arrows there. That's what you are looking at, right? And if I'm going to pull out some moving averages, okay, so price to break out those 1 hour or 1 hour, 4 hour going to be far away. So you are just simply looking prices to break out those 1 hour moving averages and continue to keep dragging more lower, all right? Or push up for another leg higher within that wedge and then drop from the previous top or new high. So if I'm going to pull out the lower time frame, all right, then you are looking another correction right now there. Okay, and that correction to just clear that trend line and continue to keep dragging more lower. Okay, or watching this price for short. Okay, if it pull back up to this price, then you are looking it to drop from there. So Uzi New Zealand dollar to drop to. Okay, so trade is very much clear over there. You are just watching for that. Dollar peso. All right, dollar peso is just reaching to that previous low again. So you are paying attention price to hold this daily low. Right, and continue to keep rising for more upside. Dollar Chinese yuan. All right, so there's going to be a big wave, as you know that we are having policy divergence between China and US. Fed raising rates, Chinese are cutting rates. They are creating more money while Fed is, taking the money supply away from the market. So strength on the dollar. Okay, but you shouldn't chase the prices at the current. So you see that last time we were talking about the dollar Chinese yuan to, keep rising every time when it formed new low. Okay, so similar again, you are just letting the price keep forming new lows, and every time when you see that the new low is just coming out over there, you are looking it to break out for longer term. Okay, this is going to be a longer term trade. Okay, once we can have that aggressive breakout, then we may see something like that kind of move. Okay, again, if we go back and look at the yield curve, what yield curve is telling us? Yield curve is telling us that we are, market is preparing for that move. Okay, preparing for that move. So if I'm gonna, pull out this chart on US balance sheet or Fed balance sheet, all right? If I'm gonna pull out that chart on this, so histogram. So it is going to take times, okay? So if you are planning to trade on this chart, make sure you are planning to look for that for longer term. All right, so there is the candles are not clear. So let's just go to the line. Okay, so there where the Fed started to wind up their balance sheet. Okay, there is in 2017. Okay, when they were, winding up their balance sheet, dollar was in strong demand. Okay, so Fed saying that they're gonna wind up their QE program and they're gonna start, reducing their balance sheet. Okay, so we're not gonna see this move. Okay, this is not going to happen. Okay, we are also having policy divergence between the US and China. Okay, so we're going to see this wedge, the wedge which is just there. Okay, that's going to break out aggressively for upside. So same price behavior which we have seen last time when Fed went for QT. Okay, so that's the reason you are planning for longer term on this chart on the dollar Chinese yuan. Okay, and every time when you see that the price is forming new low, you are looking first of all for short-term trade, okay, like the previous one. Okay, like this previous one, and in best possible scenario, the breakout of that wedge for longer term for upside. Okay, so the trade you are targeting gonna be that first, all right, from these previous lows. All right, so that's the trade. And once we're gonna have a breakout, the sharp breakout, okay, then this to go all the way back to that previous top. This is a longer term trade, guys. This is not a short term trade, so it may take a lot of time. But when we're gonna have a breakout, okay, so the breakout gonna be very sharp. Okay, many of you guys not gonna be able to cash that simply. Okay, it's gonna just keep climbing very, very aggressively. So you have to keep eyes every time, and price is just coming close to the previous low or forming new low. All right, and let's just look at the EU stock. So the EU stock is also same, lads. So we are, you know, within a correction. Okay, I don't see that the euro stock gonna continue its bullish trend for more upside. Last week we were expecting it to hold that previous top, all right, this area. So slightly went higher, okay, but I don't see that this is gonna continue for more upside. Okay, as I said, we may see another leg lower on the US stock, all right, so we may see another leg lower on the EU stock too. All right, so this is what you are looking for right now, this wedge to break down for another leg lower. All right, so if I'm gonna, you know, draw, okay, this is what you are looking, another leg lower. All right, so let's just pull out some moving averages. Okay, price still struggling to go beyond those 4-hour moving averages. Okay, the moving averages which we were talking about last week. Okay, so you're paying attention at this area or new high, and this to break down rather than continuation for more upside. So same goes with the US 30, like other US indices. Okay, I see another leg lower, possibility of another leg lower. German 30, I see possibility for another leg lower. I don't see continuation right now. All right, the way I have explained the Euro stock 50 wedge, another leg to appear and then break out or break down from current price. Okay, another leg lower and then break down for another leg lower. Same goes with the stock 600. I'm going to ignore the UK 100 index. Same goes with the, you know, Frank 40. All right, so hold those moving averages, okay, and fall down for another leg lower. So trade with care. I'm showing a bearish move on the indices. Okay, so trade with care, trade with all precautions, because market is believing that worst is over. I don't think so that the worst is over. So gold went lower from the previous top. We were expecting it to hold the previous top and drop. Okay, so let's just pull out this chart on Fed balance sheet and let's see how it tells us. Okay, so last time when Fed started its hiking cycle, okay, that was the hiking cycle. All right, gold simply went lower from this top to this low, so it dropped from 1360 to 1200, almost 1200. All right, so Fed is also planning again to do that there. Okay, and they said that this is going to be faster this time. Reduction in balance sheet going to be faster. Okay, so we may see another leg lower on gold at this area. Okay, flat formation. So again, make sure you understand that what's happening around the world. All right, geopolitical scenario is very uncertain. All right, any uncertainty from geopolitical side simply gonna be a bullish story for the gold. All right, simply gonna be a bullish story for the gold. And again, once Fed gonna get ahead the curve, okay, once they're gonna raise the interest rate till 175 or 2% or whatever, all right, and gonna start trying to get out from the inversion of the yield, okay, then again gold gonna start rising. Okay, for Fed to get out from the inversion, they have to bring down the interest rates. They have to go for a easy ultra loose monetary policy, or they have to stop their balance sheet. So that's going to be a again longer term bullish story, which means that gold going to be a buy opportunity again somewhere around 1680 for longer term, 1680 or 1650 or at the previous low. Gold going to be a longer term buy opportunity, even if Fed keep the pace, whatever the pace they are having right now, all right, slow or faster. So gold simply going to be a bullish story. All right, so right now expecting it to fall all the way back to this previous low, find its floor over there, okay, and then continue its trend for more upside. So if I'm gonna look at the lower time frame, all right, so you are simply looking price to hold these moving averages. Okay, we may see another push up, or let's just find this. All right, so you are looking for this flat formation to hold. Okay, so quick reduction in Fed balance. They definitely gonna announce their structure next month in May, and gonna tell us that how much per month, either 100 billion or maybe 150 billion per month. All right, that's gonna set the tone for the market. So this is what you are looking, flat formation to hold and continue to keep dragging more lower. So trade with care. When it comes to counter the gold, it's very risky all the time. Okay, when you are selling the gold, it's always risky. So you need to know that what you are doing. Okay, you must need to know that what you are doing. So same goes with the silver, another leg lower. Okay, so just simply fall back to this previous floor. Copper, okay, so I'm expecting copper to drop for longer term. So we may not see, again, guys, it's going to depend on the Fed balance sheet structure, how they're going to structure their balance sheet for reduction. All right. And if I'm going to look at the 2017, all right. So 2017 was that, okay. Or let's just see XCU USD. Let's just pull out that on the balance sheet. So that's the reason, guys, last week I was telling you that the Fed balance sheet is very, very important for the market, right? So that's the reason Fed even did not talk about that in the previous weekly market outlook. They just simply dodged those questions. Whenever XCUUSD, whenever someone was asking about question about the balance sheet, Paul was just trying to say this and that, and we haven't spoken about that, or we are trying to finalize the structure or working on that, okay, because they know the risk, so it's not coming out. All right, so we are not having the full data on that chart. So if I'm gonna pull out that copper chart from here to just let you know that know those dates. Okay, so copper is inflationary item. Okay, so this is the 2017. All right, and that's the 2017 when copper found its top over there. Okay, and then went lower. So what you should expect from copper to do now. Okay, Fed is just going after the inflation. They raised the interest rate. Okay, so if we are going to have similar kind of that's what this is what they are not saying right now. Okay, this is what they did in 2017. Even the 2017 Fed said that the reduction in the balance sheet gonna be slower. Okay, and it was slower. It wasn't sharp. It was slower. The pace was slower. Okay, now they are saying that the pace gonna be sharper, not slower like that. Okay, gonna be sharper to the downside, and the reason, because they wanna bring down the inflation. So if this is going to be sharper like that, okay, so we're not gonna have corrective move. Okay, we're gonna have a quick sell-off over there on the copper or on other, you know, inflationary assets. So same goes on this, on the copper too, right? So we may see copper to fall very, very aggressively too. So if I'm gonna look at the copper chart, okay, so copper is also trying to find its top over there. All right, and looking again, trade with care. They are still higher. Inflation is still in pipe, and a war is going on. Okay, so simply looking for this to continue to keep dragging more lower. If it goes higher, let's say go for another leg higher, okay, then the longer term picture I have just shown you, that's not changing. Okay, then the longer term drop gonna be over there on the copper. All right, so copper, platinum, those assets also gonna be similar like that. And if I'm gonna these you know, these also gonna go down. Okay, these are the inflationary item. Fed is just trying to come over on them. All right, they're gonna drop too for longer term. So all these should drop now for longer term. So if you are trading on them for selling the commodities right now, it's very risky. Okay, Fed has just started, but once that effect gonna start to play out, all right, they have just started last week. Yeah, we are just 1 week away. Once, you know, that gonna have effect on down the line, then these assets gonna start you know, reacting to that. All right, so these also similar. The US Russell 2000 also similar. It just bounced off and went higher. If it's similar, I'm expecting one more leg lower and test the bottom and then higher. Same like the other indices. Same on US Russell 2000, another leg lower, at least back to that previous low. All right, so US Russell 3000, again, it bounced off. All right, so expecting one more leg lower rather than continue to keep pushing more higher. All right, so if I'm gonna look at some Chinese, you know, indices, China is trying whatever they can to push the indices higher. Okay, but I don't think so they're gonna be able to do that. Okay, because Fed is there. Fed is there right now. Okay, and Fed is just trying to reduce the money supply. So whatever Fed, you know, China is gonna do, they won't be able to success to you know, lift their indices for more upside. Okay, so I see that they're gonna keep the trend intact to the downside. Okay, and again, once Fed gonna go ahead the curve, all right, and gonna try to get out from the inversion, then we may see the rest of the world indices gonna start, you know, rising. So the trend is still bearish. Last week's trend on the Chinese indices does not make any sense for me right now for staying bullish on them. Bearish, still bearish. Okay, so let's look at some cryptos. So cryptos still dead, okay, or dying, we can say that. You know, we haven't seen any change since last week. Okay, why? Because Fed is there. All right, Fed is, you know, just taking their tools out from their box and trying to fight with inflation. Okay, so when they're fighting with inflation, these are the inflationary assets. Okay, they gonna struggle. They will struggle. So the window which I'm telling you, okay, the window is very much clear. The yield curve is inverting. Okay, Fed is raising the interest rate. Okay, they will keep raising the interest rate till they're gonna get ahead of the curve. Okay, and once they're gonna get ahead of the curve, they will roll back. Okay, they will roll back and they will try to get out from that inversion. Once they will try to get out from that inversion of yield curve, that's going to be the time for all these risk on assets or cryptocurrencies to gonna explode, all right, to rise for the next leg for upside. So if you are planning to buy these, you know, coins now and looking to hold them for for longer term, okay, you are, you know, buying them too early, okay, maybe 6 months early or 9 months early. If you're gonna buy them now, okay, that means you have to hold 6 months or 9 months, and after that, you know, when Fed gonna, you know, roll back its tighter monetary policy, then you may see, you know, some strength on these coins. So I will suggest you to not look at them for longer term right now, because timing is not there yet. Whatever the people are saying right now, okay, because timing is not there for them to explode. All right. So last time we have seen, you know, explosion on them. Okay, July 2021, and that there was the reason for them to rise, because Fed wants to create inflation. Okay, now they don't want to create inflation anymore. Okay, they want to bring inflation down. Okay, and these coins are pricing in for that. All right, so once Fed gonna roll back, that's gonna be the pricing in time for them. Okay, so all these coins are struggling. You know, one or two can spike up. One or two coins can spike up, or individual coins can spike up. But I don't see major move on the cryptocurrencies across the market right now. Okay, I see that, you know, many major coins gonna sit at the bottom, gonna stay there for a couple of months. All right, at least 5 to 6 months. Okay, and after that we're gonna have, you know, next move, next wave on crypto market. Okay, so they are pricing in for the tighter monetary policy. So crypto market is pricing in for the tighter monetary policy. So still stay that daily correction. All right, so this might be a coin which is not reacting to that Fed policy. All right, and still staying strong because of the, you know, individual case. Okay, we can have individual case like that. We can see, you know, a coin is you know, bouncing off every day. All right, but that coin is not going to sustain its gain for longer term. All right, that's what I'm telling you. That's not going to sustain its gain for longer term. It's going to fall back again. All right, because fundamentals are not supporting those gains to hold. So these coins are there where we were left them last week. All right, so all are struggling. And if someone is saying to you, buy this coin, that's going to explode, they are not going to explode because the reason is not there. So Dogecoin, dying. Have you seen any new tweet from the Elon Musk? No, he's not tweeting anymore because, you know, he was the first guy who was selling the Tesla, all right? Who's, you know, he sold Tesla shares at at top, all right? So he sold his shares when Tesla was there, somewhere within these areas. Okay, so if I'm not mistaken, there at this area. All right, and since then it's just, you know, dropping. All right, so there is no reason right now, guys. You put your money in and wait for these coins to rise. They are not going to rise simply. Okay, they're gonna sit at the bottom, and that can take a lot of time like this. Okay, a lot of time. This is just 62, 3 months. All right, but a lot of time like that before you are going to see. You need another inflationary cycle for these coins to rise simply. Okay, they can sit at the bottom. So you need another inflationary cycle. All right, not deflationary cycle. All right, so this is also sitting at the bottom. All these coins are struggling, sitting. All right, so this is also struggling within a daily correction. So this is also struggling. Okay, going back to the bottom, FTM. All right, FTM to also continue to keep dragging lower, go more downside. I don't see this is going to happen. All right, so they're gonna struggle more downside. OITA, more downside. Dot, more downside. Struggle. Okay, so they are struggling, trying to find their floor. Okay, but that can take, as I said, lot of time, guys, lot of time. Balance sheet needs to come down first. Fed balance sheet needs to come down first. All right, so Shiba, don't buy. They're gonna sleep for a while before they're gonna rise. All right, so the GX chain also gonna sleep. They made their moves. CTX also gonna dropping. All right, so I'm gonna drop back to these lows. So EMP. All right, so all these coins are the coins which I'm having on my list. They are not rising, at least right now. Okay, but coins maybe which you are looking maybe rising. Okay, but again, I said to you, a coin or two can rise, okay, but they're not going to sustain their gains for longer term till this deflationary cycle. We get out from this deflationary cycle, which Fed is trying to bring. All right, so let's just finish here. XLM also slow, go more downside. All right, more downside, go more downside. So let's just finish here. Is there any question? Let me know. Otherwise, crypto market to just keep struggling right now. All right, so if you have any questions, so how, so is there any question, lads? Let me know. Gold, we have already seen gold, okay, and the charts you are watching, which I have just shown you, okay, this is still, you know, correcting over there, or pushing slightly back to the previous top. So you're watching and watching for the good news to come out from the Ukraine and Russian war. Okay, if a good news come out, if they reach to an agreement, that's going to be a good news for the market. All right, specifically going to be a good news for the European assets. All right, so going to be a good news for the EU, for the euro, going to be a good news for the pound. All right, so if bad news come out, more escalation, then that's going to be a bad news for the pound, going to be a bad news for the euro. All right, so thank you very much. We'll see you back again in another weekly market outlook. Until then, bye and have a good week.